Well, office occupancy remaining well below pre-pandemic levels, hovering around 50%. That's according to the latest data from building security provider Castle Systems. Well, despite the weakness across the sector, there is still strong demand, though, for Class A buildings, with firms including JLL noting an uptick in high-value leases in 2022. But despite effort from companies like Amazon and Zoom to bring workers back to the office, we know that employees, are pushing back. Here with more is HqO co-founder and CEO Chase Garbarino. Chase, it's great to see you here. So let's just first, because I know you work at HqO, you work with landlords, you work with property teams to identify ways to enhance their properties, to attract some of those employers to the spaces. What are you hearing from the property owners, from the landlords, just in terms of what demand looks like and what it is that companies want?
Yeah, I think first off, thanks for having me. And, I think it's a really interesting problem that they're running into right now because, it's a category that has historically been relatively disconnected from the end user of their product. Typically you're dealing with one or 2 points of contact at a tenant company. And, we have this very fundamental shift where a much broader population of, the employee base has significantly more say in where they work. And so I think the category as a whole is undergoing, a significant transformation that a lot of other industries have had to take on, a lot more quickly, which is being much more data driven about what their customers want out of their product. And so I think, where we continue as an industry to kind of fall flat, we're going on 2 or 3 years now of companies saying, this time we're serious. And here's the amount of days that we want people back. We need to have a much more granular conversation around the data of why we're trying to bring people back, why it's good for the employee experience, and, ultimately how it's going to make the company and the employees, more productive while managing work-life balance.
So Chase, based on what you're hearing from clients, what are those employees wanting out of the end product, which is the office? What are you hearing?
Yeah, look, I think one of the funny things is if you just follow the headlines on LinkedIn, I think there are stories every day saying that the office is now just a place for socialization. But, we have over 1 million employees in our database. And, there's some consistent patterns that while they are looking to collaborate and really try to get that face-to-face interaction with their colleagues, they also need to be supported with focus space, right? So when you become accustomed to, say, 1 to 2 years of completely personalizing your own home office setup, it's very difficult for, the executives at your company to say, we expect you back, but your setup is not going to be as good for you as it was at home. So I think being really data driven and thinking through, how we've become accustomed to certain types of focus work and how we need to mirror the home office at the office place of office, the office building itself is going to be a really tricky thing for these folks to try to upgrade, quickly because, it doesn't move that fast.
Chase, do you think in terms of the workers that have returned to the office, have we pretty much topped out? Because we've been hovering around this 50% occupancy level now for several months.
I don't think we've topped out yet. I think there, a number of folks are still kind of making their way back. I think there's a lot of change that needs to shake out in the category, right? When you actually look out at the building stock and you look at, you cited that JLL statistic about, premium leases. There is a lot of development that needs to happen to really upgrade the stock of product to what I think the market is going to demand in years to come. So while I do think, in the next 3 to 5 years, we will see occupancy continue to rise, it's just not going to be a snap back like it was, when people were ultimately asked to go home during COVID. And how we upgrade the product, it's just going to take some time because not only does it take time to redevelop and reposition an asset, but from a financing perspective, there is not a lot of financing right now in the market. There are some good signals, with Goldman announcing that they're raising a fund from a distress perspective and a lot of smart equity folks raising money to come in where they see opportunity. But that's going to take some time to play out in the system for sure.
We've heard a number of analysts warn that there could be a lot more pain to come within this sector. Chase Garbarino, great to have you, CEO and co-founder of HqO.